Julia, are you a baseball fan by any chance? This wasn't on the pre-show script.
Yeah, and I'm not really a
No?
baseball fan.
All right. I was hoping you say yes, so I could take the opportunity to show off my new Jackie Robinson rookie card I picked up. So
That is pretty awesome.
it's a very iconic.
I don't think you have to be a big baseball fan to appreciate that.
That's true.
So we should ask our guest, Rich, before we plunge into things, what do you want to be called on this show?
I am fine with, well, really anything you choose, but people often call me Commissioner Gordon.
Okay.
Partly because that's really fun for people to say.
Mm-hmm.
And I have my Commissioner Gordon action figure right here.
All right.
Also,
Commissioner
I have
Gordon
this. I have this. Okay, so I'm leaning into it.
All right, Commissioner Gordon it is.
I love it. I love it.
Glad I asked.
Absolutely. Happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the rundown with Rob and Rich, where we take you into the weekend by wrapping up the week that was in the mortgage industry. As always, very pleased to be joined by my esteemed colleague and co-host. No idea where Rob is this week, in front of a large tree, evidently. Rob Chrisman. Rob, good to see you. And where the hell are you?
I am, well, Commissioner Gordon will find this interesting. So I am at a school in California Central Valley called University of California, Davis, UC Davis. And to the west of here, which is that way, is something called DQ University, which in the old days, like the Cleveland baseball team, used to be called an Indian university. And now it is apparently a Native American university. And I tried to go out there to broadcast this, but it's not a very welcome environment. So I came back to UC Davis, and UC Davis, well, I'll show you real quick. UC Davis is huge in terms of the bicycle population. And so that's where I am, Rich. UC Davis in Northern California.
Awesome.
You're back to school, huh, Rob?
Well, there are a lot of folks running around that are a lot younger than I am, I'll tell you. But they look very serious. So you'll be happy to know that I think our youth are taking their education seriously.
Well, that's good to know.
You know, we have a big guest, TMC Chairman of the Board, CEO, Jim Park. Jim, great to see you. I know you and Commissioner Gordon, good friend. She was crowing about you and how highly she thinks of you before we went live. So I know you wanted to pop in and say hi to Julia.
Yeah, you know what, Julia, normally Rich and Rob, they don't invite me to these things because I'll only mess it up. But I said, you know what, Julia's on. I really want to join and say hello. And congratulations once again. I know you were appointed some time ago, but good seeing you. Hope everything's okay with you. And I'm sure everything at HUD is busy and FHA is busy for you now. I'm sure. Did you guys do a good intro for Julia, by the way?
I haven't even done it yet, you know, so.
Oh.
But you want to give
she's
the intro because you know Commissioner Gordon so much better than I do. So why don't you give me?
I gotta actually go. I gotta make sure to use Commissioner Gordon. We've known each other for so long. Commissioner Gordon. I mean, obviously you've been.
Julia is fine, by the way.
Okay.
Although wait,
I just wanted to show off her action figure.
For anybody who wasn't on the podcast yet, I just want you to know that's my Commissioner Gordon action figure. So
wow.
Here we are.
Where can we get
I have
those?
a place for the bat signal when I need help.
Well, Julia, it's so nice to have you on, and I hope we can have you on in person at our next event. I know we tried to get you in Chicago, but there was some conflict. But yeah, we would love to see you, obviously. Julia and I go way back. I think we got to know each other really, really well when I started the Housing Renaissance. You've been part of that for years. We celebrated our 15th year of it, but Julia's always came to that, and along with all her colleagues and industry leaders. But she's been really a true champion. She doesn't really just talk about affordable housing and things like that. She actually has worked very hard at it, created programs. Now she's in a position of power and influence where she can make those things happen. But it's very, very rare to see people coming into a position like as an FHA commissioner, where someone who has been sort of lived a life of championing the underrepresented, underserved, and people who need the support. And her kind of commitment to affordable housing access is like no other. So thanks for joining us. I'm excited to hear from you on what you're working on, and we look forward to seeing you also in person in hopefully a few months. And are you going to be at the MBA?
I will be at the MBA. I hope to see lots of folks there. I'll be there for long enough that, HUD will have a presence there, and you can find me there or just bump into me in the hallways. And I hoping to have the chance to talk in person with lots of people, because I'm tired of just the Zoom thing. So it's great to see you, Jim. Thank you so much for that generous introduction. I'm excited to be here. And I will say this about your Housing Renaissance conference, which is, you may have noticed a number of leaders on housing in this administration who went to that conference regularly. And I don't think that's entirely coincidental. I think getting to know each other in a deep way is really important, a really important part of working in this sector.
Yeah, we've had lots of great successes. Obviously, a lot of my cargo, who was the Ginnie Mae president, was a regular at the Housing Renaissance. So was Julia. They've been a really important part of that. We've had some members of Congress who become Congressperson because of the Housing Renaissance. We've launched a lot of great careers over the years, I guess. And but it's a family of people that are committed to having an honest, sometimes, it's an honest discussion. Sometimes we don't always agree, but that's the great part of that effort. But Julia's always been, you've always been willing to speak up and sometimes say the uncomfortable things that needed to be said, right, in a room full of people. So that's what made it so powerful. So thanks again. I'm gonna let the pros, Rob and Rich, take over in terms of what's happening in the market, but I just wanted to pop in and just say hello and welcome you to the program.
Thanks.
And Jim,
Thanks,
more than
Jim.
welcome to hang out. We'd love to have you as part of the show. Your call.
I'm glad Jim joined. So get some eye candy on here finally.
Yeah, I'm
Yeah, right.
by watching the Guardians game in the background, so it may help
Commissioner
out
Gordon.
actually. So
So
I used to dress up. I never wear a suit, but I did it for Ms. Gordon. So Commissioner Gordon.
love it.
I'm touched.
Let's go ahead and get into it. And as always, comments, questions, anything, pump it into the chat, Q&A. We'd love to incorporate it into the show. Also, like to remind people at the beginning of the show, all our podcast listeners that are listening right now, join our live version Fridays at 3 and go to mortgagecollaborative.com and find out all about that. Rob, a huge week of economic news that, a lot of us were anticipating. We had the producer price index number Wednesday, consumer price index on Thursday, retail sales, and University of Michigan consumer sentiment today. The headline was Thursday's much watched consumer price index number. Long story short, it comes in hotter, both the headline figure and the core number when you strip out the volatile energy and food stuff. And really sent the market into the predictable tizzy. We saw the 10-year hit 4%, and all the predictable impact on mortgage rates. Jamie Dimon out there talking about a recession, and just so not a great week for the market. Seems like there's two schools of thought right now. It's the Fed. I believe in what they're doing. It's going to start to work, and this is the bottom. If it's the stock market, if it's the bond market. And then there's those maybe less confident in the Fed that feel that, maybe something besides that lies in the future. With more empirical data now out there, some big numbers this week. Where are you at with things?
So we should tell Commissioner Gordon that our show is sponsored by McDonald's. They pay what, $10,000-$20,000 an episode, Rich, to have
No.
their brand prominently displayed. But yeah, and the cost of my Diet Coke though, Rich, is still $1 plus tax. So yeah, inflation reared its ugly head, and every month, every week, we seem to get more news that confirms that the inflation monster is still out there. We're not used to it, 7-8% a year. It's not great. And I think that, I don't know, whoever read my opening paragraph today would know, actually not the opening paragraph, but I wrote a dissertation about why the Fed's moves are hopefully going to dampen inflation at some point. A lot of critics will say, well, any move that the Fed makes now, it'll take 4 to 6 months before they have some kind of impact. And yeah, the Fed does have control over inflation. The Fed ended 2021 possibly behind the 8 ball in terms of predicting some of these things that were going to happen. Of course, the Fed can't predict things like a Russian invasion of Ukraine, but nonetheless, they're doing what they can. Another 3/4 point hit is baked into it. But I think it's important, Rich and Commissioner Gordon, to remember that, who's on this call in terms of lenders and vendors that are making decisions about their business and about their borrowers. And throughout 2020, 2021, we had a lack of inventory. And I would always make to buy lack of housing inventory. And I always make the argument that even if rates were 0% and Jim comes to me for a loan and I'm not going to underwrite it and I'm going to charge him 0%, if there's no houses out there for Jim to buy, it doesn't matter what rates are or what the underwriting criteria are. Now, interestingly enough, we're in a situation where inventory is picked back up to more normal levels, but rates have also gone up. So the emails that I am receiving now for Commissioner Gordon's information aren't so much, gee, what are rates going to do? Because rates are firmly in the 7s, if not 8s, by the time you add in loan level price adjustments. But people are wondering about some of the loan level price adjustments, some of the mortgage insurance premiums, and I want to ask you about that in a moment. But first, I wanted to go a little bit off script with you, a little bit away from the typical FHA and mortgage chatter. There's 2 questions I wanted to ask you. The first is, being in a leadership position as you are, who do you go to when you need professional advice? Not advice about, what to bring to the family dinner for Thanksgiving or something, but advice in terms of decisions that need to be made in your role as commissioner. So who gives you advice? Who do you listen to? Who do you talk to?
So that's a great question. I talk to a variety of people, many of whom I certainly have friends, particular friends among lenders, but both lenders and servicers, folks who I've worked with on a project or, been engaged with, on a more ongoing sense. And I don't want to call any of them necessarily out by name, but they're,
No.
some of the larger FHA lenders in particular. I also stay in very close touch with my previous communities, with the legal aid folks who work in the housing space, with the nonprofits who do housing, as well as the CDFI and other nonprofit lending communities. I started a loan fund when I was at NCST that worked in some difficult neighborhoods in Baltimore with people who wanted to flip homes for home ownership. So, I talk to a lot of my friends who I used to work with on the day-to-day in that, try to get a sense of what's going on the ground. I like to hear from people who are out making loans or working with clients who are getting loans. I love opportunities to actually hear from aspiring homeowners because then you can tell how much of the stuff we talk about in our bubble, you know, how much that's really resonating out there. I have observed, not to, you know, get away from your question, but I have observed that within the government, there isn't always as much networking and outreaching outside. Some folks do it, some folks do less of it. And definitely I'm trying in my time here at FHA to push our whole team to make sure they're doing plenty of getting outside the building, whether these days that's, you know, in person or virtual, and making sure we're getting input and intel and different viewpoints. You know, you can also call, you know, 3 different economists and get 3 completely different answers. But I do feel it's useful. Like when you ask me that question, my first thoughts are all toward people working in the business as opposed to other people just inside the government.
Good answer. Good answer. The second question, I guess that's why there's a rumor out there that if you dial 1-800-JULIA Gordon, it's like a tip line that you can leave information on, but I don't think that, I think that's unfounded. The second question I wanted to ask was, when you go home at the end of the day, what is a good day for you? What makes you happy in terms of the job that you have done that day? What gives you gratification in that role?
That's easy. I am at bottom a policy person. And when we make a policy change that I think is going to be great for borrowers, you know, and good for lenders too, and is going to advance our mission of affordable and sustainable homeownership, particularly in underserved communities, that's when I have a good day. I had a great day a couple of weeks ago when we put out the positive rental history mortgagee letter.
Okay.
That's exactly the type of thing I came here to do. And when you get to do that, once you've jumped through all the hoops, and trust me, everything we do, there are a lot of hoops, and it goes out the door, and you know that now something that was really common sense is actually there in black and white in your policy. That's a really exciting feeling.
Good. Glad to hear. So returning to kind of the topic that I'm receiving these emails on, rates have gone up. Obviously, people can't impact rates, kind of like talking about the weather. You know, you might know what the weather's going to do, but there's nothing you can do to influence, but you can be ready for the weather. A lot of companies are dealing with the rate environment, and a lot of them have turned back, and the attention has shifted to some of the loan level price adjustments, as we call them, whether they're FHA adjustments or Fannie Mae, Freddie Mac, specific investor overlays that might exist. And one of the topics that has been a topic for quite some time is the FHA mortgage insurance premium, the pros, the cons. Can you tell us a little bit, kind of give us the elevator speech of what the MIP, what it is, why it even exists, and your thoughts on where things go from here? And we're not asking you to predict whether it's going to go up or go down, by how much and when, just kind of a general feeling of your thoughts on the issue.
Sure. I think it's really useful for everybody to understand that FHA is not a freestanding mortgage insurance company. We're a government program that's designed to further homeownership. And so when anything that we do is part of the Office of Housing, which is larger than just FHA, that's the office for which I'm the assistant secretary. It is part of the entire Department of Housing and Urban Development. You know, we work in a lot of different areas, and it's part of the entire executive branch. Our budget comes from Congress. Most budgets, you start work on the budget a year and a half before that actual budget year begins. And the way FHA works, the way all government loan or loan guarantee programs work is we work in an environment governed by the Federal Credit Reform Act. And then overlaid on that for FHA, we also work with a congressional mandate that we have capital reserves at a ratio of 2% or above. So we work more like a government agency. We can't just annually project, okay, here's what our claims are going to be, so here's what our pricing should be. It's really in a larger environment. If we, quote, make money on a given year, if we have what they call here a negative credit subsidy rate, that money goes to the Treasury. If we were to, lose money in a given year, that money comes from the Treasury. We are fully backed by the federal government. This is not a GSE implicit guarantee. We are a government program. And so working on pricing has a lot of considerations other than, the immediate question of, what do claims look like and what does the environment out there look like? That said, we think about this and work on it all the time. I've been thinking about this since I arrived here, certainly since before I arrived here. It is a more, it's definitely an important issue. I think it should be important for everybody. We're really glad to receive the public input. And I am perfectly happy for everybody to send me their views on it, which we absolutely take into account as we also, run our models and look at our own information. That said, in an environment like this, even if we were able to reduce the MIP, a certain amount, it is helpful, but it is not going to overcome all of the obstacles that aspiring homeowners are facing out there right now. So we do spend time thinking about lots of other things too, that we think we can help, do things we can do to help people get into homeownership.
Yeah. I've had a number of students here at UC Davis walk up to me and ask me, do you think I'll ever be able to afford a home? I don't know why they're asking me that question, but anyway, that aside, how would you explain, I was kidding there, by the way, but how would you explain the difference between, I think just for everybody's edification again, the difference between Ginnie Mae and FHA and HUD? Because I think there's some confusion out there. The loans that you basically guide through the system end up in Ginnie Mae securities, but I don't know if everybody knows the link between the two or the difference between the two. How would you explain that?
So FHA is a mortgage insurance program, which helps lenders lend to individuals or in communities or to sectors where, they might not otherwise lend if we weren't there to backstop them. And so while our enabling statute doesn't actually specify this, over the years, it's, FHA has served a role. The vast majority of our purchase loans are for first-time home buyers. For us, when we leave a refi market like we just had, and, we're now in our wheelhouse. The people getting mortgages now are getting purchase mortgages. And that's really what we're here to do. If you look at the composition of who we lend to, we are lending to lower income people, to people who come from both lower income and lower priced communities. And we do lend to a lot of people of color, proportionately far more than any other channel in the government or federally related. So in a sense, those are the, that's the space that we, if not own, then have a big piece of. And that's the, those are the consumers that I think a lot about. Those are the communities I think a lot about. And what we're trying to do is help get credit to those people and to those communities. Now, the role Ginnie plays, which is that secondary market securitization role, that is also there to help lenders. That helps lenders by giving lenders a secondary market execution for these loans, so that, we can get more liquidity into the system by selling bonds to investors. Ginnie Mae is under the umbrella of HUD. President McCargo and Commissioner Gordon, we're both actually HUD assistant secretaries. So
does she have her own action figure though?
I gotta say, there's just some things where you can't beat the commish, but it's useful for us to be under that same umbrella. Ginnie obviously securitizes VA and USDA loans as well, but the fact that they're here inside HUD gives us a lot of chance to communicate. I think in the past there has not been as much explicit collaboration, but we're trying to have a little bit more of that. We know that when we want to see more lending, I'll just give you an example. One of the holy grails in the community trying to increase lending to these underserved places and people, you're always saying, how can you get more CDFI mortgage lending going on? And you can talk about that from the FHA perspective, how do you get qualified as an FHA lender, et cetera. But you also have to talk about how those CDFIs will be able to work with Ginnie, right? Will there be that secondary market execution? Will that work out? Because otherwise the stuff just isn't going to happen at scale, right? So, yeah, I don't know if that answers your question, but that's some thoughts.
Very well. And I know Rich has a few questions that he'd like to ask you, but I think it's important for people to remember that you don't operate in a vacuum any more than Fannie Mae or Freddie Mac / FHFA operate in a vacuum. And the things, the decisions, the policy guideline changes that you might make impact your market share, also impact Fannie Mae and Freddie Mac's market share. And nobody wants to be, nobody wants to make a decision that negatively impacts other agencies necessarily, but you don't operate in a vacuum. And that has to be a somewhat difficult position for you to be in, because if you are a lender or an investor, let's say you're a AmeriHome. Well, AmeriHome can just put on an overlay or remove an overlay or make a pricing decision or an underwriting decision. They don't care necessarily what the impact is on their competitors. In fact, they'd prefer their competitors went out of business. But with you as part of HUD and tied in with the housing finance system, it's very important for you to be cognizant of how the changes that you make impact other parts of the housing puzzle. And
right, I think in this administration, we've actually done a very good job of coordinating among the different entities. I think part of that, part of it is President Biden on down in this administration care about housing. Housing's been a little bit more of a priority than maybe it has in some other administrations. But the other thing that happened is this administration came in at the height of the pandemic. And that was a crisis for, well, for anybody who worked anywhere on anything. Inside of housing, I think everybody realized how important it was for the security of the American people, really, to work together to make sure that options that were offered out there were widely available, that you didn't have the problem that we often saw during the response to the financial crisis, where your neighbor could get something, but you could not get that thing. And I remember that being very divisive at that time. And so this administration really brought together HUD and, FHA, Ginnie, FHFA, VA, USDA. And you'll remember when we were working on the forbearance policies and then the sort of post-forbearance loss mitigation policies, we tried to roll all that stuff out in a coordinated way. That was really the first time that had ever happened. And I think that set the tone now. I was going to say, as we move away from the loss mitigation discussion, unfortunately, I think we're moving back into the loss mitigation discussion. But for all of these, different areas that we want to talk about, we now have a template for how to work together.
Yeah, no, I think you and the other groups have done an admirable job in the last few years. And I think as an industry, the industry has done an admirable job in terms of refinancing or helping people with purchases throughout the pandemic. It's amazing what we have done versus, say, 2006, 2008, when we were in effect blamed for a lot of the problems of the financial crisis. This time, this industry from the top down has been heroic, and it's important that we pat ourselves on the back once in a while. So with that said, I'm going to turn this back to Rich for a little bit. And Rich, I'm sure you've got some questions for Commissioner Gordon.
Yeah, and a lot of questions in the chat and the Q&A. We've got about 10, 15 minutes left. So any other questions anybody has, put them in there. We'll try to get to as many as we can. And yeah, Julie, I would just echo what Rob is saying. We talked about it a little bit before, just how refreshing it is to see the clear alignment between yourselves, the other housing leaders you mentioned, the fact that you're talking to leading lenders, an ear to the ground, that you're coming on shows like this and genuinely wanting to hear from and talk to lenders. I just, as the president of an organization of lenders nationally, I cannot tell you how much it is just appreciated. And it's just something we haven't seen in this industry. So kudos to you. And in that vein, seeking public opinion right now, I think you guys have it open for low balance solutions, creative solutions. Those of us in the industry know it's tough to make low balance loans. I mean, there's the caps on, the closing costs you could charge in terms of a percentage of the loan amount. I can tell you, as a lender in Cleveland that did a lot of this in my career, just a lot of them, you're doing them at a loss to do the right thing and to make the loan so great to see that that's open. My question is, I've heard from other government officials that when these comment periods are open, that they typically, you don't get like everybody wants to complain about, why don't you do this, why don't you do that? And you open these comment periods. So we want to use this show to promote and publicize that you guys have an open comment period, right? For low loan balance solutions.
We absolutely do. And you are absolutely right. Let me underscore that. We just put out a request for information. I think it went out on October 4th. It's open until December 5th, where we ask all the questions like, first of all, what do you consider a small balance mortgage? Or do you have a threshold in your mind, in your business, that you think, wow, under that amount of money, I'm not going to make anything, forget about it, we're not doing that? Because I know some of the academics that have worked on this have picked thresholds like $70,000. You and I know it goes a lot higher than that, right? We're dealing with a median home price in the 400s, right? Like, it's hard to get credit when you're under 200. So, we want to know about that. We want to know what really are the obstacles. Is this just about, the amount you get paid, or, is it a regulatory thing? Is it really a CFPB rule or somebody else's rule? What's really going on out there? And I think people who touch different parts of the elephant will have different viewpoints. You know, I know, you know, loan originator is going to have a different viewpoint than the, you know, the person who works in the secondary market is going to have a different viewpoint than the, you know, real estate agent. But we want to hear from all of them. We want to hear from aspiring homeowners. Did you try to get credit and nobody wanted to offer you a mortgage? Did you get stuck in some kind of land contract or something because that was your only option? That's what we want to hear. Now, I will say at FHA, our average loan balance is lower than most other channels, right? Because that's the market we serve. So I don't think FHA is kind of the epicenter of any kind of problem necessarily. But even for FHA ourselves, we want to know, is there a policy in our program? Is there something in the handbook that if we changed it, it would make it easier for you to do this business? That, you know, that's the kind of thing we're really looking for. We would like to then use this information to both inform policy and possibly inform some kind of product development or enhancement that can go at this, because, you know, many Americans cannot afford that median priced home on what is now the, you know, median home prices and median incomes just keep diverging. And so I want to get people into homes. I'm, you know, it doesn't have to be sort of the traditional image that we might have in our mind or on our brochures. You know, here at FHA, we're looking hard at manufactured housing. How can we make that a better option, a more mainstream option, an option in both rural and urban areas? Because we got to give people something. They're just not going to be able to buy those $500,000 houses.
Yeah, manufactured housing, to interject, Rich, real quickly, is a huge, great idea. You know, factory built housing. And it just has gone down the path of, oh, gee, mobile home. Oh, does it have a license plate? Does it have a trailer hitch? You know, all kinds of jokes in the industry about manufactured housing. But when you look at some of the manufactured housing that's out there, it's remarkable. It's some beautifully crafted structures that make all the sense in the world and can be very economical. So I think the industry hopes that you continue to make strides in that area.
Because we need creative solutions. Julie, your last role was president of the National Community Stabilization Trust, you know, organization really focused on neighborhood revitalization and affordable home ownership. And Rob and I, every week this year, we've been, you know, it's, you know, the affordable housing supply issue in America is one that really needs creative solutions, new ideas, new solutions. You're close to the center of this. You've spent really a lifetime, you know, working to put people in homes and creative solutions. Is there something coming down the pike we're missing? Is there anything to give you know, the audience hope? Because to, you know, Joe, loan originator, the affordable housing supply issue, it can seem hopeless at times because it's a serious issue and one with no quick immediate fixes.
Well, you know, I'm going to give a two-part answer, although then I might run up all my time. I'll try to be quick. So first, I did work while I was at NCST. Something I spent a lot of time on was working with a large group of very experienced housing advocates and people who have worked with tax credit programs to develop the idea of the Neighborhood Homes Investment Act, which would be a new tax credit program that would really, really help to increase supply in that lower priced area, whether it's new construction or rehab, or even in some cases, you know, repair opportunities and renovation opportunities for people who already live in certain neighborhoods. That legislation, I mean, that would have to be legislation, of course, to create a new tax credit program. What that would do is, you know, in many of the areas I worked in, you had this problem, which was, you know, it costs a certain amount to build or renovate a house. And then if home values or appraisals are coming in lower than that, who's going to do it, right? So what this tax credit program does is come in and fill that value gap. So you can start a project and the investors can invest in the project knowing, yes, they might be taking marketing risk. There are some other risks they might be taking, but they're not taking that risk that the home won't appraise and they won't be able to get their money back from that perspective. That's, I think that could be a game changer piece of legislation in a lot of ways. It was in the Build Back Better legislation that did not go through. It has broad bipartisan support, but that's definitely something I would advise everybody to take a look at, take a fresh look at, if you're looking for solutions that are kind of like, what's a cool new thing that we could do to try? On the just, garden variety, what levers can we tweak to try to improve things? I mean, we've got to find a way to help people buy the homes that they are otherwise renting, the single family homes they end up renting when they could perfectly well afford to buy them. There is something wrong in that transmission process. And part of it is just that the folks who are purchasing the homes and using them for rental often have an advantage over people who want to buy them for owner occupancy because they're coming in with cash rather than with financing. And leaving aside my personal feelings about even within that financing bucket, FHA being, I think, disfavored based on myths that are not true, just generally speaking, we need to be thinking about what policy or professional ethics type levers we have to continue to allow home financing to be the driver of this market and not sort of turn into the kind of second preferred, second class thing. So, there are houses and people are living in them. They're just not necessarily getting the benefit of being an owner, having that stability, having that, ability to sort of invest in their own home and, ultimately, hopefully having that wealth building opportunity.
Love it. It's refreshing to hear. And yeah, it seems like something in there, right, is the most quick, immediate fix, some sort of legislation that helps people that are renting homes buy them. Mr. Park, any thoughts on this?
Yeah, you know what? Since you brought up the rental part, a lot of these large investors are buying up, properties, converting those single family homes into rentals. But FHA has a big part to play related to rental housing. I think a lot of people forget that you wear the FHA hat, but you're the Assistant Secretary for Housing, which has a massive portfolio of rental properties. Also, hospital. I think a lot of people don't know that you also do hospital insurance. The only reason I know this is I worked at FHA 30 years ago, so that's the only reason I know that. But I know one of the things that we look at is because the increase in rent prices in this country, last year went like 20% or more, I don't know, whatever it was, and it's been like that for several years now. People are having a hard time saving for down payment. When you're paying that kind of dollar towards rent, what can the government do? What can you do in your seat to control that kind of, we talk about inflationary pressures across everything, but rent is certainly one of those. The rent going up at this kind of rate, people won't be able to ever save enough for down payment. So how do we deal with this issue, Julia? I mean, it's a tough issue. I mean, it's a huge macroeconomic issue, but is there things that we can be doing?
So, interesting that you mention all the different things I do. I'm focusing here with the home ownership hat because I know that's sort of the bread and butter of this conversation. But so first of all, FHA itself has 3 different portfolios. We have a single family portfolio, which is of course our biggest one, a multifamily portfolio, and a healthcare facilities portfolio that has in addition to some hospitals, we have quite a lot of residential care facilities that would not otherwise exist if FHA mortgage insurance were not available for them. You know, sometimes in rural areas, you know, or other places where it's more difficult to do that kind of thing. And, you know, nobody wants to live somewhere where there's no hospitals or no residential care facilities. Those are really critical components of a functioning community. Outside of FHA, the Office of Housing has an assisted rental portfolio. You know, we have project-based rental assistance. We have the Section 202, which is senior housing, and Section 811, which is housing for persons with disabilities. And this is what, you know, we're really trying to do to create more supply there, to preserve some of the older units in multifamily buildings that really need that preservation or they're going to go offline. And, you know, this is where we just have to decide as a nation, are we going to invest in this stuff? This is what's our budget? You know, what money do we get out of Congress to house, you know, your aging mom? I say your aging mom, but I mean my aging mom who lived in rent-assisted housing for almost 2 decades because, you know, she was living, her annual income was about $12,000. And, you know, that's just, you're just not going to do that in a market rent unit. So this is something as a country, we need to say we are committed to housing all of our people and at a, you know, an affordable rate. For young people starting out who might want to get into homeownership, Jim, you're absolutely right. You know, we want to give them those opportunities. We have some programs in the government that try to help folks renting with us move into homeownership. We're trying to beef that up. This, you know, Secretary Fudge in this administration has had a really strong focus on asset building. So that kind of thing is really, really important. And it is just, it's just critical for everybody that we not be choosing. I mean, I'll just talk out of school and say, sometimes I find myself in conversations where we're, you know, taking some dollars and saying, okay, we can either use them for this super important thing or that super important thing. And now we have to like go fight it out when we should be funding both of those things. And you know, stable housing is the platform for everything. It's the platform for family stability, for education, for good healthcare outcomes, for public safety, for all the things you need. You know, as we say here, like decent, safe, and affordable housing. And you also need a good chunk of home ownership because we know home ownership does have a role to play in strong communities. And so it's just always surprising to me, you know, when I see Congress work on bills like, you know, the recent Inflation Reduction Act. Like, why wasn't there way more in there for housing? Let's really think about that as a nation.
Yeah, I think those are very good points. Rich, how much more time do we have? Rob? Rob's getting sunburned.
Rob's agent is very adamant that he has to be done at 3:45.
We have to pay him extra for
exactly,
if he stays on longer.
The fine print of ours.
Maybe we can kind of leave on a little bit of a high note. I think you know, with Commissioner Gordon, you know, it's been sort of doom and gloom. People have been feeling it obviously for the past year, and it doesn't look like a whole lot's going to change in many ways for the next year or so. I mean, do you see any like bright spots, Julia, in terms of the work you're doing? What are you excited about? I know you talked about looking at different ways of calculating creditworthiness and stuff for traditionally left out individuals. But are there other things we can be doing to kind of move the needle? And I know there's been a lot of focus on minority home ownership within the administration and within HUD. I know it's a steep challenge when you have an interest rate environment that moves in this direction, but what else can we be doing to support it? And I was just going to do a quick plug for the membership base of TMC overall, which is, we represent the small, mid-sized originators that are actually on the ground originating. We're not the aggregators that are disconnected from what's happening on the ground. So we do sort of see what's happening, but these are real challenges that I think people are just struggling with. How do we help those people when just, when their mortgage just went up by 50, 70%, right? Or whatever in several months. So
Jim, I think there's a lot of really good news, and I don't spend most of my days kind of immersed in the doom and gloom. And I actually sometimes try to limit my social media consumption to avoid that. The fact is, every year FHA is here making hundreds of thousands of loans to first-time home buyers who are getting that first, getting their foot on that first rung of the ladder and taking a step for their families. We're doing it, even in a tough environment, we're doing it. And we get to see that we're doing it. I think we all just came through one of the more successful government efforts I've ever seen, which was the COVID forbearances. We said to homeowners in America, you might be worried that the first thing you're going to lose right now in the face of this insanity is your home. We're going to take that worry off the table for you for a little while. We're going to let you focus on your health, the health of your loved ones, on whatever's going on with your job, getting your PPP loan, whatever it is. And we gave them that space to breathe. A lot of people took forbearances. We know lots of people took forbearances who didn't even really use them. They took it more as a insurance, I just want to make sure I'm good here situation. And we saw a lot of people go into, technical delinquency with a forbearance. And look at where we are right now. We are back to just normal levels of delinquency. That is an amazing success story that shows a lot of things. It shows the power of government. It shows the power of what we can do when we work together. And frankly, it shows why it's like a great case for why home ownership has benefits that we don't even think about. I mean, in a way, although obviously it took the great work of a lot of servicers and other folks in the industry, in a way, these homeowners kind of self-financed their own bailout, if you will, right? You took a lot of arrearages and you put them onto the end of the loan. It's not like it's gone. That homeowner is eventually going to pay that. But we were able to use the kind of magical structure of the mortgage to get through this unprecedented crisis period. That's a great story. So now looking forward, yes, home prices got really high because we have this supply problem. Yes, rates are going really high. They will not stay really high forever. Clearly, we have a not short period right now to work through, but there's a cycle, it'll come back. So that's why here at FHA, we're really just figuring out what are the things we can do? Like, what is the groundwork we can lay on the small mortgage front? What is the groundwork we can lay on the manufactured housing front? How can we look into the future, new ideas, accessory dwelling units, tiny houses? Like, let's look at all of these ideas and figure out how to do it, because ultimately we have the chance to do a lot of great things.
Very well said. Good stuff. Julie, I really, really appreciate you coming on. This was outstanding. I cannot tell you how much I personally learned. I know we had a lot of stuff in the chat and the Q&A we didn't get to, but just outstanding conversation, and really appreciate you enlightening our audience this afternoon.
Yeah.
And
we look forward to seeing you.
I'm going to write in the chat now. Anyone who has questions should contact my office. I'm pretty accessible. My staff is very accessible. We've built an amazing team here in the FHA front office. A lot of them, and we're just really looking forward to working with you over the next couple of years.
Yeah, Julia, we know how open you are to these types of dialogues and discussions. That we had this sort of similar open channel with FHFA director as well, where we meet every 6 months, where we bring our group of very diverse people from all walks of life, background, regions, different lenders together to kind of talk about issues they're facing. We would love to have the same thing with you. And look forward to seeing you both in Nashville, and hopefully we'll see you in San Diego very soon.
Great. Hope to see you all there, and hope to see anybody in Nashville who's at the MBA. And again, thank you so much for having me on. This was a lot of fun. And I hope you'll have me on again.
Oh, absolutely. No, we'd love to. And I can attest, her office, we reach out to government people. They have like no response, or weeks and weeks and weeks, prior administrations. But yeah, right back to us. And we're glad to have you on, and we'd love to do it again. So thanks again, Julie. And to our attendees, thanks as always for wrapping the week up with us. We're here every Friday at 3 p.m. Eastern with the Rundown with Rob and Rich, where the goal is really to wrap up the week, to help save you time by running through all the most pertinent things that have happened outside your silos. So appreciate you all that join us. And until next Friday, be a great weekend, great rest of the week. Mr. Jim Park, thank you for joining us as well this afternoon, and for giving Julia a proper intro and some great perspective on these really critical issues we face.
Well, we're lucky to have you, Julia, in that role. So thank you for being a part of this program.
Excellent.
You're welcome.
All right.
Until next Friday, everyone, have a great weekend.
Take care.
Take care.
Take care. Bye-bye.